In this video, I am going to do the technical analysis of Dow Jones Industrial Average Index for the week commencing from October 18th, 2021. So this technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. So I'm going to start with the weekly chart first. Okay, so we are here on the weekly chart, and these are the weekly candles, not hourly candles, not daily candles. These are the weekly candles. If you see this, the last candle, okay, this last candle, it's a bullish candle, it's a heavy bullish candle, okay, and this candle was formed, means this heavy bullish candle was formed because of the last two trading sessions that were on Thursday and Friday. So this is the earnings season, okay, and because there was some good earnings reported, so because of those reported earnings, okay, there was this very heavy movement in the Dow Jones and also in the SP 500 index. Anyways, this is a very heavy bull candle, okay. So this very heavy bull candle, the significance of the candle is that the market is going to move up, means the next candle that is expected to form, okay, it will be, or sorry, it may be a bullish candle, or at first it may move up and then it may come down, okay, or if there will be a gap down opening, then first it may come down and then it may take a rebound, okay. But in general, the interpretation of this candle is that the next candle that is expected to form, it will be bullish in nature, and if it will be bearish in nature, then that will be the bearish, the reaction will be limited, it will be limited to this level, okay, which is around 34,900, okay. So let's talk about the support and resistances. So support and resistances are still the same as they were for as they are for last couple of months. So we have very stiff resistance here at 35,700. So 35,700, it is very heavy resistance. Then we have very good support at 34,500. So this 34,500, then we have very good support. Then we have another very heavy support at 33,600. It is at 33,600. So market is expected to move between these two, okay, this 35,700 and this 34,500 in the coming week, okay, or in this month. And if it comes down, then it will hit 33,600, okay. So these are the support and resistances. Now if we do the technical analysis, so if we talk about the technical indicators here, then we have this okay, so we have the moving averages. So if you see that after 1 year, okay, this was the first time the market came below the moving averages, okay, but in last two successive sessions, okay, for the week of October 4th and for the week of October 11th, the market is bullish and it has formed a bull candle above the moving averages. So it is an indication that market has regained the bull direction, okay. So market lost the direction here, but because of these two successive candles, okay, the market has regained the direction. And if I talk about the Ichimoku, so yes, the market is on this one side of Ichimoku, in the bull side of Ichimoku, so market is still bullish through Ichimoku, okay. And if I talk about the Bollinger Bands, so yes, so last 1 2 3 4, so out of 5, so 4 out of 5 sessions, okay, they were closed below the SMA of the Bollinger Band, but this is the first time after 5 sessions that market has closed above the the SMA of the Bollinger Band, okay. So it is again, it is on the bull side of the Bollinger Bands, okay. Now if I talk about some other technical indicators here, so the other technical indicators, so okay, so we have stock RSI, okay. So this stock RSI is bearish, or you can say that it is marginally bullish. Stock RSI is marginally bullish or it is bearish, okay. because stock RSI, it is still the K channel is still less than 25, and the D channel is almost 13 or 14. Okay, and if I talk about the MACD, then MACD on the weekly chart is bearish, or it is heavily bearish. You can say that MACD on the weekly chart is bearish. So the stock RSI and the MACD both are bearish. Okay, here. And momentum, yes, there is momentum, means momentum, it is still over 70, so not heavy momentum, but yes, there is still good momentum that is supporting the bears, not the bulls. Because if you see this candle, the last candle, okay, at first for 3 days it was bearish, okay, then in last 2 days it was bullish. So this is how it was formed. So there is still very good momentum that is still favoring the bears. uh, Divergence, so divergence is okay, divergence is not a problem here. So considering all of the technical indicators, okay, the trend is not clear, it is not clear on the weekly chart. So the moving averages, only the moving averages and this support, okay, they are supporting a bull trend, but the stock RSI, okay, and the MACD and the momentum, they are supporting the bears. Okay, so what so in this case what may happen is, because the trend is not clear on this the weekly chart, okay, so now what may happen is that because of this means we can call it as a weak bull trend, not a bull trend but a weak bull trend. Now market will be bullish only if it crosses this level. If it crosses this level, okay, which is around 35, it was 35,600. Okay, so if it crosses 35,600, then only it will be considered as a bullish market, but as of now it is weak bullish. So what may happen is that on Monday, okay, or on Tuesday, the market, if there will be a gap down opening, then for sure market will, that the market will come down. If there will be a gap up opening, then market may try to move up. It will find this confluence zone here at 35,600, okay, or 500, and then it will take a rebound and then it will come down. Okay, so this picture will be more clear on the daily chart. So let's move on to the daily chart. Okay, so we are here on the daily chart. This is the daily chart. Okay, so let me mention it here. This is the daily chart. So if you see that like the market was coming down, okay, and then there was this the rebound in the market. So last week in my technical analysis I told you that there may be a rebound in the market. So just be careful, and whenever there is a rebound, okay, you should go for the selling. Okay, so you should sell whenever you see a rebound. So in this case the market has crossed the cloud. Okay, so market was below the cloud, okay, here below the moving averages, so it was bearish. So now it is so now there is a rebound in the market. So this rebound, okay, it is again an opportunity, means there means at this point market is building a lower high, okay, means provided the market does not cross this the 35,600 mark. Okay, so if market does not cross this the 35,600 mark, okay, then it will be considered as lower high. So market will hit this, or has already hit this lower high, and now the market is expected to come down. So when it comes down, okay, it will hit these moving averages or the boundary of the Ichimoku, okay, which is around 34,700 or 34,700, 35,000, 34,800, 34,900. Okay, so if I do the technical analysis here, sorry. So if I do the technical analysis here, so I have first I have the moving averages. So because the market on 2 consecutive days, the market has closed above the moving averages, so market is bullish. Okay. Now we will see whether there is a momentum or not. Okay, so market is bullish because of these 2 consecutive sessions, and secondly market is also bullish because it has crossed the Ichimoku. It has crossed and closed above the Ichimoku. Okay, now we have covered the Ichimoku, we have covered these the moving averages. Okay, now if we see the Bollinger Bands, okay, so Bollinger Bands, there is the problem because the market has closed above the upper band of the Bollinger Band. So it was not supposed to happen. It was supposed to bind up around 35,190, 180 or 190. Okay, but it has closed above the Bollinger Band, so which means that uh, a brief or a short U-turn, okay, it may be seen in the market. Okay, means on Monday, probably on Monday, okay, or on Tuesday, Monday or Tuesday, you will see that market may try to move up, okay, but the market has to come down. So most likely you will see a bearish candle, okay, in the market, or at first market may come down and then market may take a the U-turn. Okay, so this is what is expected because it must respect the Bollinger Band. Okay, and because there was the exponential increase in the price, it means around 1,000 points in 3 days, sorry, in 2 days. There was this 1,000 points, okay, this movement in just 2 days. So market has to justify these things. Okay, so it is expected that the market may come down, but otherwise the market is bullish. Okay, but look for this, the confluence zone. This is 35,600. Okay, so Bollinger Band is also supporting the bull trend, but the problem is that market has crossed the Bollinger Band and it is expected to come down to respect the Bollinger Band. Okay, now comes the other technical indicators. The other technical indicators that we have here is, first we have the stock RSI. Stock RSI is bullish. Okay, if you see this, the stock RSI, it is more than 75. A channel is more than D channel, so it is bullish. Okay, and it is close to heavy bullish, but it is still bullish. If it crosses 90, 95, then it will be heavy bullish. So we need to see like what happens on Monday. If I talk about the MACD, MACD is bullish. Both stock RSI and MACD are bullish. Okay, and all of these moving averages are bullish. And momentum, no, there is, okay, this is a relief for bears because there is not enough momentum that is supporting the bulls. Okay, divergence is okay. So through all of the technical indicators on the daily chart, market is bullish. Okay, on the weekly chart, it was not clear because stock RSI and MACD and the momentum, they were supporting the bears, so it was not clear. So in this case, you can what we can say that market is weak. It is weak bullish. Market is bullish, but it is weak. It is weak bullish. Okay, so market is weak bullish here. Okay, but if it hits 35,600 and if it crosses 35,600, then yes, then the market will hit 35,700 and then it may breach this point and then it may move forward towards 36,000. Okay, now let's see like what is expected to happen on Monday. So on Monday, we need to see, because look, it has already crossed the Bollinger Band on the daily chart. Okay, so it is expected that it will come down to respect the Bollinger Band, and also it has not respected, okay, some of the moving averages that are most critical here in last two sessions. So market will try to come down to respect those moving averages, and thereafter it may take a U-turn. Means if it closes two candles, minimum two candles on the hourly basis above the moving averages, okay, in that case it will take a U-turn. And if it remains below the hourly candles, okay, two consecutive candles, then it will further come down. Okay, this limit is will be defined by, okay, these moving averages, because the moving averages will come to this point. So 34,800, 34,800 or 34,900. Okay, 34,000, so you can say like 34,700 to 34,900 is the limit. Okay, so this is actually the limit that whenever market comes in, whenever market moves back, okay, comes down, then it may try to hit. So this is actually the confluence zone. You can say that this is the confluence zone, 34,700 to 34,900. Okay, so if the market comes down, okay, and if it closes here, so what you need to see is that whether it closes above the Ichimoku or below the Ichimoku, because if it closes below the Ichimoku and below this support, then for sure market will come down, and market will come down heavily, and then it will move towards 34,000 or 33,000. Okay, but if it holds above this the Ichimoku, okay, where the boundary is 34,600, if it stays above 34,600, then then the chances are that it may move up. Okay, so so I will say that you should, wait and watch. So you should wait and watch. Okay, so particularly on Monday and on Tuesday, okay, so you should be in the wait and watch mode. So wait and watch and to see like what happens, because if it moves up, then 35,600 is what it will be looking for. Okay, 35,600, and if it comes down, then we know 34,000, 33,000. Okay, this is it. Okay, guys. So this was my technical analysis for for Dow Jones Industrial Average Index for the week commencing from October 18th, 2021. Should you wish to participate in my stock market programs, okay, then I have given the links to these programs in the description of the video. And also, should you wish to participate or should you wish to join my Discord group, okay, then I have given the email address, my email ID, okay, in the description of the video. You can send me an email, okay. And don't forget to like and subscribe this video.